morning, everyone. Thank you to Cambridge House for hosting us and Samson for introducing me there. I'm here to talk about Roxmore Resources and the Converse Gold Project in Nevada. We recently, made a few changes at Roxmore. It's the old AXCAP Ventures. Renamed it Roxmore, recapitalised it and brought in some new management team to take the project forward. I think hopefully by the end of my presentation today, you'll get a bit of an appreciation for Converse. It's a very large heap leachable project in Nevada, and we think it's got a very strong pathway through to permitting and production, and we've got a PEA coming out in about the next 3 or 4 months. So something to showcase what I think will be a very compelling opportunity. Just drilling on some of the things that attracted us to the company or the project. It's got scale that actually matters. It's in Nevada. I think you can't really argue about what a prime jurisdiction Nevada is. We're bringing a team of builders. So this is former Rox Gold from Burkina Faso and Cote d'Ivoire, as well as Frontier Gold. We had a lot of success and experience down in Nevada with Frontier Gold before it was acquired by Newmont in 2011. We're updating the PEA. We're using SLR out of Toronto and Caps Cassidy from Reno to do the metallurgy for us. I think we'll start to see probably a little bit of a sneak peek. Will be a probably 12 plus year mine life, targeting around 250,000 ounces of gold. So this is going to be a big project, and hopefully we'll be able to outline to you and to sort of articulate the plan going forward. Just a quick slide on capital structure. You can see here 54 million shares outstanding. We did a share consolidation last year to tidy that up. We're well capitalised at the moment to complete our PEA and the drilling that we've got currently underway and into the first round of drilling after the PEA. We've added some influential institutions and investors. You can see there ICM, one of our largest shareholders, Avenue out of Toronto, Merck from San Francisco, and Mike Gentili. We're participating in his showcase tomorrow if any of you are going there. Project itself is located at the northern end of the Battle Mountain Trend in Nevada, so you can sort of see a lot of household names, some really storied names in the gold mining industry there. We're sitting up there right next to Marigold, SSR's flagship mine, and just south of I-80. M&I resource currently stands 5.5 million ounces at 0.53 grams per tonne with a small inferred resource. This was all calculated and constrained within a $2,000 pit shell. So we see some upside from that going forward. Property's well drilled. There's been a significant amount of metallurgical test work on the project. We anticipate a very low strip ratio, very competitive with other projects of this nature. I think when we do table the PEA in the next 3 or 4 months, around April, May, you'll see a very compelling project that's based on sensible, conservative framework and has plenty of room to improve and grow from there. Just to zoom in on the access to infrastructure, you can see I-80 Interstate Highway running around to the north there. We're next to SSR's mining Marigold. We've great access to the property, a good network of county roads, 2 power lines running across the property already, so access to infrastructure is good. We have a 50-acre plan of operations already approved, so we have enough permitting to take us all the way through to definitive feasibility study and eventually a mine plan of operations. So we're well positioned in terms of what we need to have today to move the project forward. You can see there we have a nice land position. We've acquired, the previous owner had acquired water rights. That's a very important aspect for projects in Nevada, of anyone who's been involved in one down there. So we have the water rights. They are mining water rights, so they're sort of a good tenure there. And we've also, as I mentioned, got the 50 acres of disturbance. So from a getting ready to take this project forward and do all the drilling that we need to do, etc., we're well situated with enough permitting in place. Talked a little bit about that resource. One of the interesting aspects of the resource is that if you do look at it, and this is a historic resource, we will be updating the resource as part of the PEA, but if you ran it at a $3,000 pit shell, you're looking at just over 8 million ounces at very similar 0.51 gram per tonne cutoff. So you don't lose really any grade, and you add about 30% to the resource. There is an enormous amount of gold here. The majority of the historic drilling ends in mineralisation. So we think not just over and above the 6 million ounces that we have that will make a very attractive project, we have plenty of upside for the future. The current focus very much is on getting getting sort of a respect and a decent valuation for what we have. But our mines eventually will look to drill some of those deeper targets and some of those shallower oxide targets, which we think have very good low-hanging fruit. You can sort of see there are some, if you talk to people who have heard about the Converse project, you will hear a bit of folklore about it. One of those is there's a lot of overburden. I think if you started digging in the middle of that long section, which wouldn't be a very smart idea, you would have to go through a lot of overburden. But our plans will be to start where the ore body comes to within 10 metres of surface. So a series of nested pits. So it's not like we're going to have 2 or 3 years of pre-stripping here. We'll do it a little smarter than that. Metallurgy as well. I'll talk a little bit about metallurgy. It's not refractory, and it leaches very nicely on the pad. But you can sort of see here a lot of holes there extending outside of the pit shell. We put out a hole last week, 194 metres at 0.7 grams. That was to twin an historic RC hole as part of our sort of resilience and demonstrating the robustness of the resource. Of the 194 metres, only 4 metres graded below cut-off. So it gives you an idea of the continuity. You won't see that very often in a project of this size. So we're very encouraged, and that's really one of the hallmarks of Converse. This is a big continuous ore body, well suited to big efficient trucks and diggers, front end, face shovels, etc. So that's very happy with that. That hole was, I think, very reassuring, if I could put it that way. And the second hole, which we drilled late last year, was 25 metres at just under a gram oxide. This was close to surface, outside the pit shell. So we think that that's instructive for some of the near-term exploration targets to really enhance the economics with a near-surface oxide flavour as well. The project itself will be, I think, wash its face or will do very well. But anything that we can do to bring in some near-surface high-grade oxide early in the mine life will only enhance those economic returns. There's just a section there you can see on the left. That's the 25 metres at just sitting outside the current pit shell at a gram. So that's going to be the target for some follow-up drilling in the coming months. Metallurgy, if it's a project in Nevada, I think it's quite normal and quite usual to focus on the metallurgy. This project has excellent leach kinetics. Basically, if you put this into a mill and just did standard CIL treatment, you'd get 95% recovery. We're proposing to have a 3-stage crush, put it on a heap, everything leaches, oxides and transition leaps very well, and we even get plus 50% on sulphide. So we anticipate life of mine recoveries across all sort of categories, all redox categories of just over north of 70%. So that sort of gives you a flavour. You can see some of the other mines there in operation, benchmarked against those. Importantly, from a metallurgical perspective, there's over 1,000 bottle rolls and 75 column tests. So this has been well studied. There's been a lot of metallurgical test work done, and I think we can categorically answer the question as whether it will leach on the leach pad or not. Just a little bit of a bit more benchmarking. You can see on a sort of a grade strip sort of curve, we feature very well. This project, I think the strip does have the potential to come lower as we get more into the resource, but sort of sitting around sort of that 2 to 2.5 times at half a gram puts it in very good company, and we think will be a hallmark of the project going forward. And in terms of the summary, what we've done is we've built the team to take this project forward. We don't need to look for a lot more gold. We've already got it. We've got a project that is a flagship operation ready to go. I think the PEA in a few months' time will really serve to showcase this. This will be done by serious consultants, by serious people who are looking to build or at least put a document out. It's not a sale document. It's one where we're going to eat our own cooking, and we'll stand by it and look to improve upon that as we take it through pre-feasibility and ultimately definitive and into construction. And I think 6 million ounces in Nevada is rare. 6 million ounces that doesn't have metallurgical challenges or significant environmental challenges is even rarer. So I think when we actually are able to table what this project will look like in the next few months, I think it'll be quite a very interesting and very compelling looking project. So with that, I'll leave you and thank you for your time in Roxmore. Thanks very much.